Hello, my name is Mike Swanson. I run the website WallStreetWindow.com, and the odds are you're watching this video because you received an email from me by being on my email list telling you it's posted. Now, if you're not on the email list, you got to get on it. So click the link associated with this video to do just that, because today is January the 4th, 2021, the very first trading day of the year. And today, gold is up $43, and the Dow and the S&P 500 took a little bit of a hit off the open. At one point, the Dow was down 500 points, but it does look like we've come off that low as we head into the last 30 minutes of trading. I don't think we're going to go green, but we're certainly not going to collapse or crash. But what is going on? What should we make out of all this? Because the down day in the market is certainly surprising very many people, but so is the up day in gold. I didn't see an email or comment from a single person on Twitter world, Facebook world, the major publications predicting gold would surge $43. But here it is, and mining stocks are up even more. But I want to show you a couple things for us to think about, because in some ways, the rise in gold and silver's up also isn't that shocking when we look at what had been going on already in the previous year. Because here's an interesting little article on Axios that was posted this morning about what had gone up the most last year. Which asset classes performed best in the market frenzy of 2020? Now, everyone talks about NASDAQ, Facebook, Tesla, these things. It's all they talk about on the financial television channels if you live in the United States. But there's other things that went up even more in the previous year. For example, silver was up nearly 48%, the top performing major asset class of anything. Soybeans went up 40%. If you look at orange juice, copper, corn, and gold, all went up around 25%, when the Dow only went up 7%. The S&P 500 went up 16%, but all these other things I mentioned went up even more. And the reality is, if you want to beat the market as an investor or as a trader, the simplest way to do it is be in the things that are beating the market. And today, when you see gold up $40 when the stock market's down, that's part of that trend of these things are beating the market. And there's no reason to think that those trends are not going to continue for the rest of this year. Because another trend that happened last year is that the US dollar index declined. While everything else went up just about in all the global markets, all the major asset classes, the US dollar index was down 7% to close at its lowest point since early 2018. What went up the most as far as other major currencies against the US dollar? Well, it was the Swedish krona, which rose 14%. So here's the thing to think about, though. When the dollar goes down in value, if you're an American and you invest in foreign markets that are doing well, you actually get a benefit from that currency exchange rate difference. Something I've thought about a lot and did some things about, but something that more and more people will have on their minds, I believe, as time goes forward. But gold and silver are definitely things that historically go up when the US dollar goes down. But what goes up even more than gold or silver when they go up are mining stocks. And so today, the GDX Gold Stock ETF, which I do have a small position in my retirement account, but individual mining stocks will go up better than this ETF and are today the best of the best. This ETF is up 7%, up in a way in which it is gapped up above resistance, that downtrend resistance line, which represents a consolidation pattern that started at the end of July. That consolidation pattern now finally seems to be complete. We did have a false breakout right after the election, but this one looks like the real deal because it's also being confirmed with a massive rally going in that's gone on all day in the price of gold and silver, and the US dollar index fading once again. And all this is happening also when the stock market is down. So when you see the market is down, you want to see what is up. And here we will look briefly at a chart of the S&P 500 down 63 points. Really the biggest down day, I think, since October. Now, why is this happening? I don't think it's the start of a collapse or even a 10% pullback, although I do think we'll get a 10%, perhaps even 20% pullback later this year. I don't think it's going to start in January. And one positive reason for the stock market, why I say that, is that the VIX, the volatility index, has gone up at one point right below 30, close to over a 25% gain intraday during the day, and now it's up almost 20%. Why is this significant? Because this is the so-called fear index. It measures the premium that traders are paying in the options market for volatility. And when this goes up, it means there's people out there scrambling to buy puts because they're scared of market declines. They want to hedge their positions by purchasing puts instead of selling stocks. Typically, when you see this indicator spike up towards 30, it's actually not the start of a big decline, but a bottom in the market or the end of a decline. So we just don't, this indicator tells me that, you know, this isn't the start of a significant market decline. I actually think this indicator will go down below 20, most likely towards 15, before we see a real big market correction. This is something I've been saying now for 6 weeks. So I'm saying it again because I still think it's the case. And it's why this one-day pullback in the market does not really concern me that much. So why do I think it's really happening? Well, I chalk it up to something very simple. The stock market went up a tremendous amount from the March low. Many people, in fact, got into the market for the very first time after that March bottom, getting in April and May and June by opening up accounts with Robinhood, using their stimulus checks to jump into trading, but so did many others. In fact, many people went on increased margin going into the end of the year. The stock market accumulated record margin debt. That alone can cause some selling because people on margin become very skittish if they see a pullback in the market because they're on margin. They can lose massive amounts of money very quickly. But a more important, I think, significant reason that explains today's decline is that it's the first day of the year. And many people in December, going into the end of the year, decided or thought to themselves, look, I don't want to sell into New Year's because if I sell before New Year's, I'm going to have to pay taxes on my gains when I report on April 15th, the deadline, what I made. But if I can just wait until January the 1st, I can delay reporting those gains until 2022. In fact, 15 months away. And that's a big deal. So that's something that a lot of people do in December. They hold off selling to delay their capital gains taxes 15 months. And that can create a diminish of sell volume in the market and make it easier for stocks to stay up or even levitate up because there's less liquidity because there's less sellers for this simple reason. But these people, when January the 1st comes, some people have been itching to sell this or that stock, and boom, the calendar switches, and now they sell. And when they see the Dow go down 500 points, the farther the Dow drops, the more and more they think I better sell now before things get lower, before I lose even more and more of my profits. So this, to me, is just a short-term thing, and that's why the VIX spiked up as quickly as it did. And this was the start of a sustainable or drop that was going to last for weeks, if not more than just a few days or even a few hours even, although it's hard to predict how many hours something would last. But let's just say a 10% decline, then most likely the VIX would not have gone up towards 30 and would just be almost even or up a little today. So interesting times. I don't draw that much out of the market. The most important takeaway from today's action, though, is not what the S&P 500 did, but what went up, even though the S&P 500 declined, because what you want to do is invest in strength, things that go up when the stock market goes down and go up even more when the stock market goes up. And gold, silver, mining stocks are not the only thing actually doing that. If we look at the GCC, which represents a broad-based commodity index, it's up too. So commodities are doing very well. As you can see, they did crash in March. Many commodities made decade lows that look like a massive bear market bottoms in March, and have gone up tremendously ever since. And that's what you would expect, because this lockdown situation that is still happening in the economy, everyone expects that it is going to be fading away by the spring. And in fact, what I'm seeing is that a lot of expectations are by Memorial Day, a lot of things will be returning to normal. This is what I've heard is when the Las Vegas convention scene is believing that they'll be able to start up their conventions and have people begin to travel en masse to them. And that's just one example. So something to keep in mind. And if that's going to be an improved economic situation in the spring and the summer, and you can expect energy, you can expect other commodities to go up into that. And look, the Federal Reserve itself has said it wants higher than 2% core inflation. So people are going to, and already are, trade ahead of that by buying ahead of that. And this is only going to continue. So keep your eye on gold, silver, the top mining stocks. This, to me, is the most exciting segment of the market, with other things to talk about as we go on. Now, if you have just seen me for the very first time randomly on YouTube, what you're going to want to do then to get my next update is click the subscribe button with the video, and then click the bell that you see next to the subscribe button, and then YouTube will notify you immediately when the next video is uploaded, or we go live even. And that, all that said, interesting day. Let's see what happens tomorrow, and I'll be talking with you later.